this video, we are going to discuss on FinTech business models. Hello, I am Sumit Khanna. I am Chief Operating Officer for Neev Credit, an education financing company. We will cover this topic in 4 parts. What is FinTech and its origin? Growth drivers for FinTech, types of FinTech business model, future trends of FinTech. FinTech and its origin. As per Wikipedia, FinTech is the technology that aims to compete with traditional financial methods in the delivery of financial services. It is an emerging industry that uses technology to improve activities in finance. We may recall how ATM and credit cards have enabled better access to finance with the use of technology. In the present world, FinTech and Techfin is used interchangeably. A traditional bank that offers mobile banking service is a good example of FinTech. FinTech is about non-traditional financial institutions, for example, PayPal, Paytm, etc. On the other hand, Techfin refers to a technology firm that wants to deliver financial products on the basis of existing tech solutions. Classic examples of Techfins include Google, Amazon, Facebook, and Apple. Most of these tech giants are riding the FinTech or Techfin boom. These tech giants are interested in leveraging their technology to gain access to consumer data. Techfins build analytics on this data to gain insights of consumer behavior and trends so as to offer better solutions to the same consumer. FinTech exists with an objective to maximize the use of emerging technologies to disrupt existing old world financial services model. A good example of this would be the use of blockchain. Techfin exists with an objective to improve the existing experience or capabilities in the financial services industry. Not so disruptive compared to FinTech, but more incremental in nature. Growth drivers for FinTech in India. India has the highest FinTech adoption rate in the world at 87%, which is significantly higher than the global average rate of 64%. Enabling factors here include the Digital India Initiative, a conducive policy environment, and presence of a sizable talent pool. According to Mr. Amitabh Kant, CEO of Niti Aayog, the Indian FinTech industry has a cumulative funding of over $27.6 billion and is expected to be valued at over $150 billion by 2025. There are over 2,100 FinTech companies in India, out of which more than 67% have been set up in the last 5 years. At present, globally there are 187 FinTech unicorns, of which 18 unicorns are in India. Let us look at the supply side and demand side drivers of FinTech. Supply side drivers: growing computing power, widespread internet penetration, increased internet speed and coverage, government initiatives like Jam Trinity and India Stack. Demand side driver: need for inclusive financial services, customer expectations, business need to reduce cost while providing faster services, rise of super app. Now let us look at different types of FinTech business models. Payment tech. FinTech comes into play through use of services like payment gateway, card networks, application programming interface, white label solutions, as well as payment security. Paytm, PhonePe, and Google Pay are the major players in this segment. Lend tech. FinTech services employed in this segment include collection management, credit bureau, alternate credit scoring, lending as a service, loan origination system, loan management system. Google Pay, M-Swipe and Razorpay are emerging as leading lending platforms for consumers as well as merchants. Digital banking. The FinTech services employed in digital banking include conversational platforms, account aggregators, API providers and aggregators, banks with open APIs, banking as a service, and core banking. SBI YONO, Khata Book are some of the major firms with primary engagement in digital banking. InsurTech. In this segment, FinTech can be employed by providing services like claims management, sales platform, underwriting risk management, insurance infrastructure API, insurance product configurator, and policy admin system. Policy Bazaar is a market giant in this segment. Wealth Tech. The FinTech services applicable in this segment are white label robo-advisors, portfolio management suite, and cap table management. Prominent firms in this segment are Zerodha and Smallcase. RegTech or Regulation Tech. The technology is also being utilized to fulfill compliances and regulatory requirements within the financial services sector, including KYC, digital onboarding, fraud detection, anti-money laundering, as well as banking compliance and risk management solutions. Future trends in FinTech. FinTech is among the few sectors that witnessed tremendous growth even after the onset of pandemic. This sector is expected to remain attractive investment opportunities from the investor fraternity. The listing of a few FinTech startups on the primary markets like the Paytm and Policy Bazaar has further boosted the confidence of investors in FinTech startups. Growth drivers for FinTech going forward are going to be strong talent pool, increasing collaboration between banks and FinTech enterprises, as well as the fast pace of technological innovations. FinTech trends to look out for are blockchain, cybersecurity, growth of new age products like buy now, pay later, and open banking. Thank you for watching, and I will see you in the next video.